12 Best Dividend ETF to Invest in Second Half of 2022. It would entail living under a rock to not realize the current economic slump and heightened inflation. Even the highly hyped cryptocurrencies like Bitcoin are losing value. So, it's understandable why investment experts like Warren Buffett and the late John Bogle have always favored dividends. Even while dividend equities as a whole underperformed in July, several dividend ETFs had gains of over 10%. Come to think of it, you receive utility payments each month, so why not dividends? Investment portfolios provide a steady revenue source. Who doesn't want that? And this is where dividend ETFs shine the brightest. 2022 was a difficult year for the stock market. As stock values fall back to the ground and investors stay away from more risky investments, former leaders in the internet and growth industries have fallen behind. Strongly defensive categories like dividend-paying equities and firms with low volatility have benefited greatly from this. Although they were unable to provide returns in 2022, they nevertheless performed better than the S&P 500 and gave investors some level of security. By the middle of July 2022, investors had poured more than $45 billion into dividend ETFs. A significant portion of these funds was allocated to the largest and least expensive funds. You can surely generate revenue by investing in individual stocks. However, dividend ETFs can get you exposure to a basket of those stocks that pay reasonable dividends monthly. I don't see most investors aggressively hitting high-growth sectors in the second half of 2022. In my opinion, dividend exchange-traded funds are excellent investments during current difficult economic times because they provide constant income and steady returns. In this video, we will be doing an ultimate reveal on the 12 hottest dividend ETFs to invest in during the second half of 2022. We will also be digging through a bit more detail about what ETFs are and how they work. But before getting into today's main topic, make sure to hit the subscribe button. Also, tap the bell icon so you can be the first to know about the latest information as we share them. Cheers! Exchange-traded funds. What are they? The top performers of 2022 are dividend-paying funds. Shares, bonds, and commodities are just a few of the numerous assets that ETFs may invest in. The S&P 500 and the Nasdaq 100 are two examples of particular indexes that ETFs frequently follow. Since ETFs consist of a collection of securities, they can be compared to mutual funds. However, an ETF trades similar to a single stock. When compared to buying individual stocks, an ETF often carries less risk while still offering exposure to the overall market, a certain industrial sector, or other subsegments. In other words, purchasing one ETF share gives you a small stake in all the fund's assets. A dividend ETF investment is made up of equities that pay dividends. Consequently, it serves as an income investing strategy for people who buy the ETF. If you're thinking about purchasing a dividend ETF, consider the following questions to ask yourself before reaching a decision. Is a dividend ETF worth investing in? Compared to a single stock, a dividend ETF contains more diversified investments spread over different asset types. Similar to stock prices, ETF share price swings are possible. But instead of depending on just one stock, the performance of the ETF as a whole is what determines the value of your investment. They are a compelling choice to think about for investors who don't care about paying fees and don't have much interest in researching particular securities. Investing in dividend ETFs assures an investor's peace of mind and time savings. How have they performed over the year 2022? Consider checking the ETF's returns in the same way that you would check the performance history of a stock or a mutual fund. If you are concerned about how to access the historic performance of a dividend ETF, then you can access the data through the fund tracking system or at the website of the ETF issuer. The dividend ETFs you're considering should be examined for their year-to-date performance. You can also analyze their average annual returns for the last 3 to 5 years to have a clear understanding of dividend payouts. Do dividend ETFs cost a lot? Unlike some other mutual funds, ETFs generally do not charge excessive fees. However, since ETFs are traded like stocks, there is often a commission associated with buying and selling them. There are some ETFs on the market that do not charge commissions. However, they might have higher expense ratios to offset the expenses that have been lost by not charging fees. A dividends ETF expense ratio indicates the cost associated with buying them. Actively managed ETFs tend to have higher expense ratios than passive index funds. In addition, the ratio is determined every year. So, how do I find a good dividend ETF? Before deciding on dividend ETFs, you should thoroughly study the dividend history and its payout ratio. Consider aspects including the performance of the fund, assets under management, and expense ratios when choosing them. Make a list of your assets and how you wish to distribute them before making an investment. Keep in mind that maintaining diversity is the key. The best exchange-traded funds of 2022 that pay monthly dividends. The following ETF options provide investors with a top-notch means of achieving a wide range of goals they may have for the next year. It's imperative to note that this is not advice to stockpile all of these 12 dividend-paying ETFs. Instead, I hope that this extensive list can offer practical advice to all types of investors in a variety of circumstances. Stick to this video until the very end to find out which solid ETFs are best suited to achieving your goals for 2022. Number 1. JP Morgan Diversified Return International Equity ETF. So at number 1, we have the JP Morgan ETF with a 12-month yield of 6.53%, a 5-year average annualized return of 0.63%, and an expense ratio of 0.37%. Although it isn't specifically marketed as a dividend ETF, the JPIN ETF tops this list due to its strong yield and competitive expense ratio. 25% of the companies that JPIN owns are located in Asia outside of Japan. Additionally, 26.6% of the portfolio consists of European businesses outside of the United Kingdom. JP Morgan Diversified Return International Equity ETF favors utilities over financial equities. This ETF, in contrast to the majority of others on our list, invests in smaller market-sized companies with value aspects. Due to its exposure to smaller worldwide firms, this portfolio may be viewed as slightly riskier. Number 2. Vanguard Dividend Appreciation ETF. With a staggering $63 billion in assets at the moment, this ETF is one of the top 15 exchange-traded products in the United States. In short, VIG is the market leader in terms of size. The extremely cheap cost structure of this dividend ETF, which costs just 0.06% annually on every $10,000 invested, adds to its appeal. Another factor is the dividend ETF's stunningly straightforward strategy, which focuses on the top 250 or so dividend payers in the United States. Almost every portfolio would benefit from having a strong core holding that combines a low-cost strategy with the most well-liked stocks on Wall Street. VIG owns around 65% of the firms in the financial, industrial, healthcare, and IT sectors. VIG earns a 12-month yield of 1.99%, which is the lowest yield on this list. However, investors should anticipate stronger price growth from this fund. And as I told you earlier about its reasonable expense ratio, VIG maintains a larger portion of your funds invested in the market. The expense ratio should be as low as possible since this indicates that investors will receive greater returns on their investments. A low cost ratio throughout your investment lifetime might potentially result in savings of hundreds of thousands of dollars, if not more. And that's the money you need for your future. What else do you want for later in life? Number 3. SPDR S&P Global Dividend ETF. It's also one of the top ETFs with very affordable costs. SDY follows the S&P High Yield Dividend Aristocrats Index, a collection of more than 100 dividend-paying equities. The cost ratio for SDY is currently 0.35%, while the yield is at 3.44%. SPDR dividend ETFs provide clients with an equity income portfolio option. The funds follow indexes that are concentrated on dividend-paying firms that either have high yields right now or have dividends that are growing over time. Number 4. Schwab US Dividend Equity ETF. This Schwab fund should be taken into consideration if you want a top large-cap dividend ETF but would prefer a bit more yield. It provides the same affordability as Vanguard, but with a more narrow focus to facilitate better yield. Additionally, this fund has a solid track record, with roughly $36 billion in assets and only 0.06% yearly expenses. Number 5. iShares Select Dividend ETF. So the next ETF on our list is the iShares Select Dividend ETF. This fund has a dividend yield of 2.9%. This iShares product, which currently manages $23 billion in assets and includes a basket of around 100 equities, splits the difference. High-quality ETF iShares has had its shares rise by nearly 6% since the beginning of the year, outperforming the rest of the market. Number 6. Global X Super Dividend ETF. Consider the SDIV ETF if you really want to blow the roof off with a huge payout because it pays 3 times more than the previous dividend ETFs. A selection of highly dividend-paying overseas stocks is made accessible through SDIV. This dividend ETF obviously carries a higher level of risk, but it also offers significantly higher returns. It provides a dividend yield of 11.1% and an expense ratio of 0.58%. Number 7. Invesco S&P 500 High Dividend Low Volatility ETF. Invesco SPHD is the next ETF with a 12-month yield of 3.68%, an expense ratio of 0.30%, and net assets of $4.73 billion. It focuses on stocks that have low volatility and strong dividend yields. 90% of its assets are invested in common stocks of corporations in the S&P 500 Low Volatility High Dividend Index. The fund focuses mostly on utilities and consumer defense. Iron Mountain Incorporated, Altria Group Incorporated, ExxonMobil Corporation, and AT&T Incorporated are among its holding. Number 8. iShares International Select Dividend ETF. If you are someone who prefers receiving significant rewards from international investments, then you should consider the iShares IDV ETF. It concentrates solely on substantial foreign income investments and has $5 billion in assets under management. Additionally, it offers a dividend yield of 5.4% with a cost ratio of 0.49%. Number 9. Vanguard Short-Term Inflation-Protected Securities ETF. Vanguard Short-Term Inflation-Protected Securities ETF offers a 12-month yield of 5.59%, a 5-year average annualized return of 2.9%, and an expense ratio of 0.04%. Since VTIP adjusts payouts as interest rates increase, but other bonds do not, this investment option might be advantageous when inflation is strong. Generally speaking, this is a successful short-term investing approach. In addition, they are in line with the Bloomberg U.S. Treasury TIPS 0 to 5-year index. Number 10. iShares Mortgage Real Estate ETF. Choosing income-oriented sectors over frugal industries give you a chance to tap into bigger profits, which results in better yields and an increased chunk of money. This iShares fund adopts a similar approach, which focuses on real estate companies, particularly equities that are tied to mortgages and finance. Additionally, some experts are concerned that rates may creep up and that rising borrowing costs may have a negative impact. But this year, REM has beaten the wider indexes while paying substantially greater dividends, and currently, it is offering a dividend yield of 6.8%. Number 11. Wisdom Tree U.S. High Dividend Fund. Diversifying beyond the conventional large-cap dividend ETF makes sense in some circumstances. A dividend ETF with a promising small cap might be a clever addition to the portfolio. Investors looking to gain experience in the small cap value market segment should strongly consider DES. This dividend ETF offers a dividend yield of 2.06% with an expense ratio of 0.38%. Number 12. Alerian MLP. Another category of dividend ETFs worth considering is the energy sector. Due to its dividend growth, AMLP often appeals to investors. Its current dividend yield of 8.66% is significantly higher than that of other income-generating assets like stocks and fixed income. As a diversified strategy, Buffett has always favored index ETF investments. Buffett once recommended investing in a low-cost index fund for the S&P 500. He advised that keep buying it through thick and thin, and especially through thin. Buffett advises individuals to consider passive funds or ETFs since he has always been a passionate supporter of straightforward investment. According to him, one shouldn't try to complicate things that are already easy. Hopefully, you are not thinking about playing aggressively in sectors with high growth now. However, you can invest in ETFs because of their low cost and how easy they are to understand. So, that's it, guys. I hope you enjoyed the video. And if you did, or find it informative in any way, then do not hesitate to share it with your friends and family. Also, make sure to give this video a big thumbs up, as it helps encourage us to do more. I'll catch you in the next video. Until then, peace out.